Hello, everybody. Let's go to work. I'm Dale Pinker with TradeGATEHub.com, and we are sponsored and powered by TradeView Markets. Set up a demo and check the variety of instruments that could be traded, all the way futures, CFDs, Forex, crypto, which has a heartbeat. I want to talk about last week. Okay, so, a lot of people are saying, well, Dale, I didn't buy the euro. I was skeptical, and with everything that's happening in Europe, what do I do now? And there's one thing I want to stress, and I heard this a long time ago. The saying goes, to be there for the good times, you have to be there all the time. Now, does that mean that you're trading all the time? No, it means that you're there all the time. And when you're near inflection points, you've heard me say on these live streams that you put on partial positions before you have confirmation. You don't want to go all in, but you want to have a piece on in case that inflection point manifests. So here we are in the euro. It's been a very nice rally coming off. We have a nice little wick here in the candle, right here in the charts from almost the 102 level. And, that's a pretty decent first wave. I think there are more gains ahead. Right now, the support's coming in right here at 101. But tomorrow we have a very big number with the CPI. And if it's not benign or, less inflation than expected, you could expect the euro to sell off, dollar to pop. And if it's benign, I think that we'll get some follow through. I really believe that the big battle in euro, where the bears will really come in to defend, is back up here at the 103.50 level. They did so successfully here back in August, and successful enough to drive it to new lows. I do think that if we get that type of narrative and we get some type of temporary high up here at 103.50, which is a level I've mentioned as a primary objective, that if they're successful in generating a pullback, it's my contention that the pullback will not make new lows like it did here, but that will put in some type of higher low, which will make this 103.50 a pretty important breakout. And you just do it arithmetically, call it 98.5, 103.5, takes you up to 108.5, 109, which is really also very important weekly breakdown we had here. Moving average had come up here, so that's how I have some of these longer term targets. I don't think that's going to be the end of it, but I think that could be the end of the first wave. I'm not sure how long it'll take, but at least now you can trail your stops to break even. So talking about being there all the time, to be there for the good times. So I showed this divergence last week, and then if you didn't catch the initial breakout, you had a nice little pullback to buy on some news that we had last week. Can't even remember the news event. I was live talking with Adam Button here on Thursday about that. I thought the euro was bottoming, and we were talking about it. I said, well, look at these wicks, and that was a wick on the that we had on the euro, and this was a wick that we had in cable. So I think that there's more left in the dollar. I think you have to be open to on the Dixie, even though we could rally from this pretty important support level that I have demarcation here with the blue line, and then this 106.5 levels also, where he had a breakout before he had the extension to new highs. And I think it's possible that we could see 102 for this first wave, which would translate to around that 108, 109 level in the euro. So if rallies present themselves, just do your fib retracements. I've kind of given you an idea on the euro. I think that major support is going to come in just like major resistance in the dollar, I think should start up here at the 109.20, 109.5 level. That maybe we're completing this first wave and we get some type of corrective bounce. In euro last week, one of the titles of my videos was "Cable is not a short at 114," and pointed out the glaring divergence here. I also think cable is bottom. In fact, it's outperforming euro right now, and euro pound is pulling back from some resistance with, you know, you look at it here, it looks like a little double top. But I think we could get a pretty good pullback in euro pound. It's been on fire for a while. I don't think this is the end of the move, but we could have a pullback. Next time through, you know, we could be talking in the 90s. But for now, I do believe that you have to buy breaks in the pound. So, you know, maybe back towards 15.5, 120 pip break. Moving over to the star of the show, and it's silver. Okay, so early in the week, I talked about this falling wedge having a breakout. One last point in the euro. Last week, I talked about the potential of a reversal week to the upside. Early in the week, when we took out, remember the lesson on inside weeks, that early in the week, we took out the prior week's low. I said the most bullish thing the market could do is take out last week's low, last week's high, and then close above last week's high. That it didn't do, it didn't close above last week's high, but you still have to call this a reversal week. And it was a 2-week reversal because Friday closed above the prior 2-week close on Friday. And it would take a lot to turn the euro back negative if we were to take out this, we'd have to close back under 99.66. So that could be your stop if you got long partially here. If you took partial profits, you know, looking to buy the break. But silver did the same thing. I said the only way we're going to know if this divergence held on the weekly for maybe drive 2. I'm hoping there's only 2, not 3. I'd rather just have it go. But anyway, we did get the positive weekly candle, right? Started off talking about early in the week. I showed this line. I don't know if it's all the way down here now, but it was, you know, if you go back here, it was this line that it tested a few times at 18 bucks. The main thing is this is a pretty powerful rally that we've had so far here. And if you have a background in technical analysis, and, you know, I don't discount the potential for pullbacks anywhere at any time. You know, I'm looking for something, and early October could be better re-entries on longs. But if you know about falling wedges and rising wedges and what the potential is for targets off a formation like this, is that wedges can retrace 100% of the move. So that leaves, you know, the $20 mark as still a potential move off this formation. So silver, I think, is embryonic. People say, did I miss it? You know, if you're leveraged, yeah. You know, I wouldn't be putting on new leverage positions here. You know, but if you're in the minors, and, you know, something I want to talk about is probing and protecting that inflection point. So I did that here too and thought this might be it, right? It still was a great rally. Okay, it turned out not to be the bottom, but probed and protect. And, you know, sometimes you get false starts. Doesn't mean you can't participate. I mean, if you bought the silver here, if you didn't make money on this, you don't have any money management skills. But see how this turned out to be just really a stop hunt where you took out the prior lows. Everyone went, okay, I'm out of silver under this low. I think I was telling people to, you know, pull the trigger much earlier on that to get out, 1870, I believe. And here we are, really just, it's a breakout. So anyone that's looking to fade silver, I wish them well. You may get some counter trend moves, but believe that we should be well supported on any break back down towards 1870. and I still have a target on this wedge above 20, and moving averages, you know, we're getting through the 50 now, so 200's going to come up around 22. The other big call was knowing to buy silver rather than gold. The week before, I talked about this was the week. I said if we get a red candle, it was a 3 drive to a top formation, and when this ratio is heading down, your preferred long is silver rather than gold, and you could just look at the performance. Doesn't mean gold is bad, just means silver is going to hold up better on a relative strength basis. Gold encountered some resistance up here at this 1730 level, couldn't close above it. I'm sticking with silver, prefer to buy breaks in silver rather than gold because of the ratio. We'll see what happens with gold. I don't have any real high convictions, except that if we're going to be good, we should not take out 1690. If we close back over 1730, the $40 moves measure 1770, 1780. So keep an eye on that. And as I was saying, the S&P following through again, approaching some resistance here around the 4200 level. And, you know, I interview a lot of people, and I even follow some people I haven't interviewed whose work I respect. And, you know, when I bring guests here, that's not a joke. I bring them here because they can point my eye towards things that I may not have seen or considered, and can edify you as well. My expression is keep an open mind and you will keep your account open. So keep an open mind. Anyway, some of the guys who I follow are looking for some type of seasonal cycle decline to begin sometime this week. You know, we have an inflation number. Maybe we pop, follow through, and, you know, buy the rumor, sell the fact on a little less than expected inflation number tomorrow. What's going to be key is what it does from, you know, mid-month into early October. So the cycle is supposed to be like a 2-week corrective type pattern. The further it goes before it starts, the better the likelihood is of it just being a pullback with a higher low, maybe 4,000 or so. And as I look at this daily chart, you know, you guys know, followers know, I drew this black line in here before we got here last week, okay? And, you know, said it was close enough for government work the week before, you know, basically held 61.8 back here. If you take the big picture of this, it's a symmetrical triangle, which is neutral, but the potential is that, you know, we get a breakout over 4260, and you just take the measurement of the formation from this low to here, and if you go out, you could actually, you know, have a weekly downtrend line here, and then you have this triangle stretching out to here, and you can make the formation even a larger one, right? Beginning from the high of the move with this downtrend, which is, you know, going to be where the 200-week moving average is. And I'd say this would shake out shorts, closing back above the 200-day moving average, closing above this trend line. And if I wanted to be a pure technician, I could just add on this move, you know, on a breakout from 42, and that's going to give you 49 and new highs. If I go all the way back to here, 48 to 36, that's 1200. And there are some bulls that have targets in the SPX of 5400. I think that would be you know, accompanied by a weak dollar. So some of the dominoes are coming into place. If we do have a dollar top, I can't see that being anything but a tailwind for a while in equities and the silver trade and commodities in general. And I'm going to leave it with this. I hope that we're adding value to what you're trying to accomplish as a trader. I invite you to join us here. Things you're seeing on video, There are even more things posted. If you like a lot of activity, Mike's one of the best and prolific traders every day, almost every day. He's lots of ideas. He's always doing something. He has a great curated list of people that he follows, just like I do on Twitter. He's willing to share it with you. So it'll be worth coming in just to check out Mike's list, his Twitter list. And I wish everyone a very successful week. I believe this move in silver is embryonic, and I'll go out and, it's not as easy to make this call here because, we could get a 3. Look, I've been around long enough to know that everything can happen. But longer term, my counts take us up towards $38 in silver. Take a look at a monthly. So I think that here's a nice looking month that we're putting in here. We're only halfway through it. Like to see it get back, like I was talking about, over 20. But why can't this have just been some type of big ABC flag, basically a break to buy from the COVID low, and we get something like this, which was, $18 from here, will give you 36, 38. So longer term targets 38. And then if I look even a little further out, perhaps 60. And with that being said, the silver-haired trader, wishing everyone a great trading day. You could catch Mike in an hour and 15 minutes, see what he's doing, and Mike and I'll be together to talk about perhaps this rally running out of some juice and what levels we'll be looking to buy pullbacks in, and what type of equities we'd be looking at should we get that 2-week correction into early October. So good hunting, everyone. Don't just count your pips, count your blessings. Check out TradeView Markets, and I'll see you with Mike tomorrow. And that's a wrap.